We're jumping straight into BitMine Immersion Technologies today. Everyone is watching the price action, but the real story is that they just became Ethereum's biggest public whale.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
Subscribe and hit the like button because today we're tracking a company that is essentially rewriting its own financial DNA.
It really feels like that. I mean, usually when we talk about a tech pivot, we're looking at a software company doing hardware or, a car company pivoting to AI. But looking at the financials today,
Calling them a tech company feels a bit off.
it's totally misleading at this point.
Right, because the name is literally BitMine Immersion Technologies.
Yeah.
You hear that and you picture, I don't know, servers submerged in cooling fluid, giant data centers humming away. And sure, they do that.
They do.
But that's not what's driving the bus anymore. They're transforming their entire balance sheet into this massive crypto treasury.
It reminds me so much of what MicroStrategy did with Bitcoin years ago. But obviously, this time the asset is Ethereum. And the scale here, it isn't just a footnote buried in a quarterly earnings report. It is the entire headline.
So let's look at that headline, because I think people skim the news and completely gloss over the actual numbers. February 17th, 2026, just a few days ago.
Yeah.
Walk us through what actually happened, because the sheer volume is just, it's hard to process.
Huge doesn't even cover it. BitMine went into the open market and executed a record purchase. They bought 45,759 Ethereum in one go.
Wait, pause right there. 45,000.
Yep.
In a single transaction.
In a single strategic move.
Yeah.
And that cost them over $90 million.
$90 million. See, that's when my brain gets stuck in, and
Yeah.
that is a terrifying amount of cash to just drop in one afternoon. Usually a company with that kind of cash, they diversify, they hedge, they buy bonds, or they buy back their own stock. This looks like the exact opposite of hedging. This looks like betting the farm.
Oh, it is the opposite of hedging.
Yes.
It's pure conviction. When a company allocates over $90 million to a single asset class like that, they aren't just dipping their toes in the water.
No, they're doing a cannonball.
Exactly. They were pushing all the chips to the center of the table. They're explicitly telling the market, we believe this asset Ethereum is going to outperform our own operations, our own cash, and the broader market.
Which brings us to the core of the bull case here, this so-called whale strategy. We hear the term in crypto all the time, right? Whales, minnows, dolphins. But usually that's about some anonymous billionaire trading from a yacht somewhere. Why does being Ethereum's biggest public whale actually matter for a publicly traded stock? Is it just for the PR?
No, not at all. It's highly functional. It creates what we'd call a competitive moat. In the crypto world, particularly with Ethereum, size directly equals yield. It isn't just about holding the coin in a wallet. It's about what the coin actually does.
Okay, you need to break this down for me. I know staking is the buzzword here, but explain it like I'm 5 years old. Why does holding 45,000 ETH magically make them more money?
Okay, think of it like a high-yield savings account, but one that actually helps run the bank itself. Ethereum runs on a system called proof of stake. To validate transactions and secure the whole network, you have to lock up or stake your Ethereum.
Okay, so I put my coins in a digital vault.
Right, and because you're providing that security layer to the network pays you interest in the form of more Ethereum. Now, if you or I did this with 1 or 2 coins, the yield is, it's okay. But when you're a whale holding 45,000 coins, you have massive scale advantages.
Because you can run your own infrastructure.
Exactly. You run your own validator nodes way more efficiently. You have actual market influence. You can negotiate much better terms for liquidity provision. It essentially turns the company into this giant self-sustaining yield machine.
So, simply put, they buy the ETH, they lock it up, and literally while they sleep, the pile of ETH just gets bigger.
Precisely. It's a double-barreled approach to revenue. First, you get the capital appreciation if the dollar price of ETH goes up. But second, you get the yield, the interest while you wait. So technically, even if the price of Ethereum stays completely flat, they are still making money.
Which sounds great when the price goes up or stays flat. And the market seems to be betting that it will go up. We track momentum indicators pretty closely on this show, and the Benzinga Edge score for BitMine just did something wild.
It really did. It surged from 88.65 to 94.23 in a single week.
Again, for the listeners who might not be staring at terminal screens all day, what is the Benzinga Edge score? Is a 6-point jump actually a big deal?
It's massive. Think of this score as a heat check for institutional interest. It blends technicals, fundamentals, and market sentiment. Most stocks just drift. They move a point up, a point down. When you see a score cross into that 90-plus territory, it signals a major breakout to elite performance tiers.
So the algorithm is essentially flashing green.
Flashing bright green. It tells us the momentum is real and, more importantly, that the institutional algorithms, the smart money, are waking up to the play. They're seeing this as a serious momentum vehicle, not just a gimmick.
But here's the weird part, and I want you to unpack the psychology because it feels entirely backward to me. The stock actually dipped a bit right after the announcement. They spend $90 million, they become this massive whale, the Benzinga score flies up, and the stock drops.
Yeah, that's the psychological shift we see all the time. You essentially have two different brains working here. The retail investor looks at a company spending $90 million in cash and thinks, oh no, they're burning through their runway. What about liquidity? How are they going to make payroll?
Right, they see the bank account draining and they panic sell.
Exactly. But the institutional metrics, like that Benzinga score, suggest the big players are looking at it completely differently. They don't see spending, they see asset accumulation, they see a strategic balance sheet swap.
Swapping cash for crypto.
Right. They're swapping cash, which is inflationary, and loses purchasing power over time for Ethereum, which they view as a pristine, appreciating asset.
I was reading there's been a massive surge in interest from Wall Street names around this ticker. It really feels like the institutions are quietly positioning themselves at a discount while the retail crowd is still choking on the news.
That is often exactly how these corporate pivots work. The initial reaction is pure confusion, like, wait, aren't you an immersion cooling company? Why are you acting like a crypto bank? And that's followed by a delayed realization of the immense leverage they just acquired.
Let's talk about that leverage, because this is where the multi-bagger potential comes into play, this idea that the stock could double, triple, or more. Currently, the share price is hovering right around $20.
Around $20.13, to be exact.
But if you look at the chart, the 52-week high was $161. That is a massive delta. We're talking about a stock trading at a fraction of its recent highs.
That gap is exactly what aggressive value investors look for. If, and obviously the big if, the crypto market recovers and BitMine returns to those previous highs, you're looking at an 8x return from the current levels.
An 8x return is life-changing for a retail portfolio. That turns 10 grand into 80 grand.
It really is. And the market cap is currently sitting at $9.16 billion. If they get back to that 160 range, the valuation expansion would be phenomenal. You're effectively buying a $160 stock for a $20 discount ticket, assuming the core thesis holds up.
But hold on, it isn't just Ethereum, right? There is this other detail in the financials that I literally had to reread 3 times because I was sure it was a typo. The beast factor. They aren't putting 100% into ETH. They are aggressively reinvesting into something called Beast Industries.
Yes. This is the absolute wild card. And honestly, it's the part that raises the most questions right now. They made a $200 million investment into Beast Industries.
Wait, $200 million? That is more than double the Ethereum purchase we just spent the last 10 minutes talking about.
It is, and that's why it's so critical to understand. Everyone is completely focused on the Ethereum whale headline. But they quietly deployed double that amount into this Beast Industries entity.
What even is it? Is it a media company? Tech? Is it Mr. Beast, the YouTuber?
Well, the details are a bit cryptic. The filings mention a connection to Tom Lee, the famous crypto bull, regarding these moonshot bets and the end of crypto winter, but they don't explicitly link it to the YouTuber, even though the name is obviously very provocative.
But Tom Lee is involved.
The sentiment tracks closely with his market forecasts. Putting $200 million into a diversified bet like this suggests they aren't putting every single egg in the Ethereum basket, even if that basket is huge.
It frames BitMine as more than just a proxy for ETH. It makes them look like a broader, aggressive growth vehicle, like a mini Berkshire Hathaway, but for crypto digens.
That's a great way to put it. A highly leveraged, crypto-native Berkshire. If Ethereum stagnates for a while, they have this massive venture capital style bet in Beast Industries that could pay off entirely independently. It diversifies their upside.
And practically speaking, the revenue potential on the ETH side is straightforward, like we talked about with the staking.
Yes. As the dollar price of Ethereum rebounds, the baseline value of their treasury goes up. But those staking rewards, the interest paid out in ETH, also become way more valuable in dollar terms. Their revenue theoretically climbs rapidly without them ever having to sell a single token. It's a compounding loop.
Sounds like a dream scenario if you're a bull. You buy the asset, you stake it, you wait for the moon, and you have the secret beast weapon in the back pocket. But we are the easy money show, and we have to be real here. This is not a free lunch. Let's break that down even further and look at the risks.
We have to, because they are substantial. And, potentially fatal to the company substantial.
They really are. The biggest one staring us right in the face is the concentration risk. I saw one analyst refer to it as the ETH-Zilla warning.
It's a very fair comparison.
Yeah.
We have to look at market history here. There was a competitor, let's just call them ETH-Zilla for the sake of the example, that tried a very similar pure play strategy. They went all in on a specific crypto ecosystem.
And what happened?
When their main backer, Thiel, exited his position and the broader market turned, that stock collapsed 97%.
97%. That is a total wipeout. That's not buying the dip. That's a death sentence for your portfolio.
That is the ultimate danger of being a pure play proxy.
Yeah.
If you buy BitMine, you are effectively buying Ethereum wrapped in a corporate structure. If Ethereum crashes, BitMine crashes. There's no safety net.
And it could actually be worse than just owning the coin, right?
Could
Because
be.
of the operational leverage.
Exactly. If the underlying asset Ethereum loses 50% of its value, the stock often loses way more than 50% because the company still has executive salaries to pay, servers to keep running, and corporate debt to service. The stock trades at a premium during the bull runs, but it trades at a massive discount during the bloodbaths.
And we've seen that volatility firsthand recently. Despite all this hype about the whale status, the stock recently tested support levels as low as $15, so it is definitely not a straight line up.
And that volatility is heavily compounded by their financial health, or rather, the structure of their financials. We really need to give the listener the lowdown on their earnings.
The lowdown is, well, looking at the balance sheet, there aren't really any earnings, not in the traditional business sense.
Right. BitMine currently lacks traditional revenue segments. They aren't selling software licenses or shipping hardware at a scale that covers their massive costs yet.
And here's the stat that sends value investors running for the hills. The PE ratio is negative. It is negative 23.08.
A negative PE just confirms they are currently unprofitable. They are relying entirely on future treasury appreciation and future staking yields to justify their current valuation. They are quite literally burning cash to exist right now.
Speaking of burning cash, I tried to pull their free cash flow numbers before we started recording. I wanted to see if they can actually afford to keep the lights on.
And what did you find?
The data isn't really available, mostly because they are aggressively spending every single dime of capital to buy more ETH.
It's a hyper-aggressive growth strategy. They are sacrificing liquidity and profitability today for the hope of massive asset appreciation tomorrow. If that appreciation doesn't happen, they're left holding a lot of expensive ether and a lot of overdue bills.
And that appreciation is absolutely not guaranteed. We have to talk about the macro headwinds. The crypto market doesn't exist in a vacuum. It exists in the real world, dealing with the Fed, global conflicts, and politics.
It does. You have very influential voices out there like Peter Schiff warning that Bitcoin could easily slide down to $20,000.
And if Bitcoin sneezes, the whole crypto market catches a cold.
Exactly. Bitcoin is the center of gravity for this market. If Bitcoin drops to 20K, Ethereum is going straight down with it. BitMine's balance sheet would take a massive immediate hit. You're looking at a 50 to 60% impairment on that $90 million they just spent.
Plus, it's not just crypto-specific news. We're seeing geopolitical tensions flaring up, specifically the U.S.-Iran situation that was flagged in the recent reports.
Right. Whenever there's serious global instability, risk-on assets like crypto are usually the first to get liquidated as big money runs to cash or gold. That puts immense direct pressure on BitMine's share price.
So you have all this external macro pressure that the CEO simply cannot control. They can have the best staking strategy in the world, but if a conflict breaks out or the Fed tightens rates unexpectedly, their stock is going to take a beating.
Which brings us to what I call the premium trap. And this is the fundamental question I think every listener needs to ask themselves right now. Why buy the stock at all?
It is the million-dollar question. Why buy BitMine at $20 a share when I can just open a Coinbase account or set up a cold wallet and buy Ethereum directly? I avoid all the corporate risk. I don't have to stress over their next earnings report.
Right. If you buy ETH directly, you own the bearer asset. If you buy BitMine, you own a company that owns the asset. Plus, you are paying for their corporate overhead, their executive salaries, and their bad quarters.
So I'm basically paying for the CEO's lunch.
You are. And you're likely paying a premium for that corporate structure. The inherent risk is that you're paying $1.10 for $1 worth of Ethereum, purely for the convenience of holding it in a traditional brokerage account. Now, for institutional funds that are legally restricted from holding raw crypto, that makes total sense. They have to buy the proxy stock.
But for a retail listener,
It's a much harder sell, unless you fundamentally believe in that beast industry's upside or their superior staking efficiency.
so we have this massive bullish bet on one side. The whale strategy, the surging Benzinga score, and some glaring financial vulnerabilities on the other. For the people tuning in who are actively watching this ticker, what exactly should they be looking for in the next few weeks? Give us the roadmap.
There are a few key dates and catalysts to watch. First and foremost, mark your calendar for the April 2026 pivot.
April 2026, why is that specific month so important?
This circles back to Tom Lee's forecast. He has publicly predicted the end of the so-called crypto winter by April 2026.
Okay, so that's the timeline for the big thaw.
It aligns perfectly with upcoming Fed minutes and a potential macroeconomic sector rotation back into risk assets like crypto. If we get to late April and the market is still completely stagnant or dropping, that entire bullish thesis takes a major hit. But if we see a positive movement there, BitMine is positioned to ride it harder than anyone else because of that leverage.
Okay, so keep an eye on April. What else?
Staking updates. The whole market knows they just spent $90 million on ETH. Now the market is waiting for official confirmation on exactly how they are deploying it.
Right, they want to see the yield. Show us the receipts.
Exactly. Are they staking 100% of it? What validator platforms are they using? What is the expected annual percentage yield? Any corporate announcement that clarifies the actual revenue generation from that $90 million will be a massive trigger for the stock. If they announce a superior yield, expect the stock to pop.
And then there's the wild card we talked about earlier, Beast Industries.
Yes. Keep a very close eye out for any PR regarding that $200 million investment. Is there a major content partnership coming? A strategic merger? A new joint venture?
It's so interesting, just the word beast. If the market rumors are right and there's some massive creator economy angle there, that changes their valuation multiple completely.
It really does. If they can monetize a massive global audience on top of their crypto treasury, it totally separates them from being just another holding company. It is a wildcard catalyst that is absolutely not priced into that $20 share price yet, mostly because nobody knows what it looks like.
And finally, purely on the technical trading side, we need to watch the floor.
That $15 price level, we tested it recently and it held firm. If BitMine breaks below $15, the entire technical trend changes. That indicates the institutional support is gone, and we could be looking at a much deeper, painful correction.
So $15 is the absolute line in the sand.
It is. As long as it stays above 15, the bullish structure remains intact. Below that, it gets very ugly very fast.
Okay, let's unpack all of this and give you the lowdown.
Let's do it.
Here is the summary of the trade. BitMine Immersion Technologies is effectively a high-octane, turbocharged proxy for Ethereum. It is an aggressive, highly leveraged bet on the crypto market roaring back to life in early 2026. They have bought the dip massively, and they are pivoting the entire structure of the company to capture that upside.
That's the perfect summary. It's pure leveraged play.
But here is the final provocation I want you to think about before you make a move. Do you actually want to bet on the technology and the management of this specific company, their ability to navigate immersion cooling and these mysterious beast partnerships? Or are you simply looking for a convenient vehicle to ride the Ethereum wave? Because if it's just about the wave, you have other potentially safer options. You can buy the spot ETFs, you can buy the coin directly.
But if you believe in the whale strategy, the idea that immense size creates its own gravity, its own yield, and its own unique safety, then BitMine offers something you can't get just holding coins in a wallet.
It does. It offers unprecedented scale. And in the crypto markets, sometimes sheer scale is the only safety net that actually matters.
I couldn't have said it better myself.
Extreme volatility is guaranteed here, folks. But for those of you watching the charts, being a whale is certainly a lot more interesting than being a minnow. Thanks for tuning in to the Easy Money Show. Stay curious, stay liquid. We'll catch you next time.